right. Let's see. All right. Can you actually hear the music? No, you can't. You can't hear the music. Why can't you? Test one, two, test one, two. Testing this live on stream. Can you hear this? Not working. Not working. Oh, you can hear it. All right, folks. Just going to test this out one more time. All right, well, that's not working. Fine. We'll leave the music for today. And let's get to it. The Black Swan from Nicholas Nassim Taleb, part of the Incerto series of books about uncertainty. We talked yesterday about Fooled by Randomness, which is the first book in the series, where what we get to talk about is one second here, folks. Where we talked about Fooled by Randomness, where we had a situation where people they like to see patterns in things that are not there, which makes sense. We're used to doing that. It helps us guide through the world. Um, it's chaotic out there. The whole system is chaotic. The whole universe is an infinite field of potentiality, and our bodies are designed to filter that down in order to be in a coherent structure that helps us move from point A to point B. If you really think about it, the whole universe, the whole existence is shown before our eyes, before our senses, and our bodies sort of filter out all this information so that we only see certain spectrums of light, certain spectrums of sound, certain of touch, and so on and so forth, so that we can have a narrow experience, and we continue that in everything that we're doing. So Fooled by Randomness talks about this idea of this propensity that human beings have to do that, to see patterns where they don't exist. Black Swans, the Black Swan book is arguably the most popular of, I guess, between that and Anti-Fragile when it comes to Taleb's books. And it was super useful because it gave a term, it gave a new concept, the Black Swan, that people can use as shorthand for whatever they're talking about. You have the Black Swan is the idea that, let's say you've never seen a black swan before. To you, swans are always white. And so you have a rule that all swans are white, and you make plans accordingly. And then all of a sudden one day, a black swan shows up. I believe this is like an actual situation that occurred that's been referred to. I can't remember exactly. Read the books a little while ago, but the idea here is that a black swan shows up, and that negates the entire experience, the entire idea that this improbable thing, this black swan, when you thought that all swans were white, now that rule just completely blows up. And if you were betting on that, if your experience was depending on that, well, all of a sudden now you're in a different situation, a different world. So black swan events have become synonymous with which are unexpected events, or events that were not accounted for in a given model. We see this when it comes to the normal distribution. So the normal distribution here, if you imagine the bell curve, what you have is a situation where, actually, let me show you that here. So if you have a normal distribution, you have this bell curve of probability of events. And the idea here that the most common events happen in the middle area within one standard deviation from the mean. So this is the average. Over here are what happens under the most circumstances, so 68% of the time. You have here in the second standard deviation things that are occurring 27% of the time. And then the remainder of the time you have here, these are called tail events. Though these events happen, 4.7% of the time. And the idea is that the further you go out, the more improbable these events are. Now, what's interesting is that the normal distribution, the Gaussian distribution, actually is like misleading. This is like smoothing out the rough edges of our experience, because actually events that happen at the end, the improbable events, happen way more often than you might think. Way more often than the probability suggests. Uncommon events, outlier events, black swan events happen. We've been talking a lot about this on our videos over the last couple of weeks, but the idea is that any particular once in a generation occurrence, any particular one might be rare. So it might be rare, let's say, for any, I don't know what the stats are in baseball, but let's use it. It might be rare for any given player to hit a home run. Might be unlikely for any player to hit a home run, but it's not unlikely that a home run will be hit. So that uncommon events that would be in a normal distribution rare, it's not uncommon that rare events happen. Just a particular one occurs. And so you have situations where when you're a trader in the stock market and you're looking at a series of information, you go, well, this has been normally the stock or this asset only moves at most this much. within 20% from its mean at any given time. And so you might place bets accordingly, going, well, the idea that it might fall dramatically 50% is not likely, but that can actually occur, right? The idea that this stock might not fall, fine, today, but over time, just because this hasn't happened in the past doesn't mean that it can't happen in the future. And hedge funds and money managers and all kinds of different investment vehicles sometimes fall prey to this. They say, hey, volatility is low and it's been low for 40 years. Let's go ahead and sell volatility. It's a great way of making money. And then all of a sudden, volatility picks up and they're left holding the bag. This is called the picking up nickels in front of a bulldozer. So the idea is that you pick up a nickel, it's fine, pick up a nickel, it's fine, pick up a nickel, it's fine. But at one point, it might run you over. And so what I actually found for myself as a trader, I found it super useful. Because what would happen is that there would be black swan events that I just could not account for properly. And I just kept losing and losing and losing and losing when I was doing these bets, because you succeed in a certain vein, and then you're not mitigated against. If you're not mitigated against these black swan events, you end up sizing too big. You're going to size too big because you go, well, I haven't lost the last 20 times, so I'm probably not going to lose the 21st time. And you start counting the money that you can have if you keep doing this bet, and all of a sudden you end up losing out. So it can be pretty brutal when that occurs. So I actually started one way that was actually pretty successful trading is that what I would do is aim for black swan events. And the thing with black swan events is that I believe there's a term that people use also, which is gray swan, which is an event that's unexpected to this group but not to that group. So you'll see me on Polymarket. I talk about Polymarket all the time. I'll do that where the market is betting that there is a 5% probability for a thing happen, and that's where the odds are. But it's a 20% probability that it can occur. And so I'll bet on it, buy the shares at 5%. And then when the market even temporarily moves in my direction, where the market is repricing this 5% risk towards the 20%, so it goes to 10%, well, I could double my money. I could sell my shares there because the odds have shifted, and then take advantage of the mispriced odds even before the event actually resolves. This has been pretty interesting and pretty fun. In the option space as well, for trading options, I would do this because inside of the option space, it's basically, if you haven't traded options, the idea is that you're, instead of buying a stock or a future, what you're doing, or currency, what you're doing, or a bond, what you're doing is there's a whole other market, a derivatives market, that is betting on the likelihood of the price getting to, rising to or falling to a certain price, a certain strike within X amount of time. See, when you're buying an asset, when you're buying Bitcoin, let's say, you can just buy and hold it. There's no time frame to it. You can buy it, just hold it as long as you like. And so if the Bitcoin moves up 20%, well, you make 20% on that. If it falls 20%, you can either realize 20% loss or hold on to it. But if you're using options, what you can do is you can bet that Bitcoin will move up 20% within the next month, and someone else could take the other side of the bet and say, well, I don't think it'll go up 20% in the last month. And so they give you odds on that. And you get this convexity to it, that if the price of Bitcoin does go up, or it doesn't even have to be convexity, but you can have a bet that if it does go up, that you get this advantage. You can either get a payout, or you are allowed to buy Bitcoin at a lower price than the person than what it is on the market right now. So if Bitcoin is at 90,000 and you think it's going to go up to 100,000 within a certain period of time, and the other person says, I don't think it'll go to 100,000. They take the bet. If it goes to 100,000, you are now allowed to buy Bitcoin at 100,000. And if it goes to 120,000, you can still buy Bitcoin at 100,000. So there's advantages that exist within the market where one group of people think that a black swan can't occur or it's not likely to occur, and you believe that it is, and you think that the odds that are there are mispriced. For black swan events, what is interesting as well is that most models are, well, let me put it this way. Human beings are it's very difficult for us to consider black swan events because you have to consider something that has not occurred and that you can't anticipate. So, for example, a big mistake that I made was during the COVID crash in 2020, the market crashed significantly. Right, the world went in lockdown, shut down, market crashed, and so I was shorting the market, and I was short the market before the crash even happened. So I was pretty happy, and in my mind, I thought to myself, well, if the market if the world is shutting down, remember this is the beginning of March 2020, I thought to myself, well, of course the market should go down further, right? Of course it should go down further. That's had been my experience. When things like this happens, the market goes down, at least for some time. It never occurred to me that what would happen is that the central banks would pump in to the markets the most amount of money that has ever been pumped into the markets up until that point. Right when we saw the global financial crisis, 2008, it took until like 2013 before stock market got back to all time highs. Dot com crash in 2001. It took 10 years for the stock market to get back to all time highs. So I just thought, well, if the world's shutting down, it'll take 5 to 10 years for the stock market to get back to all time highs. It never occurred to me that the stock market would get back to all time highs within 3 months. And so not only did I lose my gains for the short, I was actually shorting all the way up. And it was 6 months before I had to be like, I think I'm completely wrong. I think I'm completely wrong because I've never seen anything like that happen. It was brutal. And I missed out on that. I missed out on the Bitcoin rise. I missed out on GameStop. I missed out on all these different things because I was like, wow, these are all once in a lifetime events, and none of it did I see coming. They were all black swan events to me. Where some other people made a lot of money off of that. All right, so there we go. That's a black swan event. Um, Improbable events happen far more often than you think. You can bet on them, and if you don't bet on them, you can at least avoid or assume that you will be hit by a black swan event, and make sure that your position size is you're set up in such a way that you are not destroyed by it. That's why when we talking about the 50x leverage trades that I talk about on Sundays on Sunday Fuel, I'm always talking about risking 2.5 to 5% of your portfolio at most. You don't want to be in a situation where you're over levered because you could be wrong. Your model could be wrong. All right, guys, let's go to coding. I was thinking today, there's something I've been wanting that I haven't actually tackled yet. So I don't know if we're going to be able to finish it today, but it is in my analysis. I need a better trend lines indicator. Right now, I'm drawing the trend lines by hand because there's no indicator that does the trend lines in the way that I want them to be. At least I haven't seen any yet. And I do have some. I've auto trend pivot inside of the library, but it's not as good as I would want it to be. So I'm going to try to build that from scratch. I'm going to try to build something else, a different way of going about drawing these levels, to make my life easier. Because I keep missing these levels, or I keep not, or I always have to draw them, and I have no indicator that is doing it automatically. So let's tackle that. flame. All right. Let's get comfortable here. Let's get confortable. Alrighty. Let's do. Try to add this to my perfect series. Perfect trend lines. All right. Actually, let's go to the chart I normally use. BitGet. BCUSD T.me. There we go. Because I already have lines drawn here. These are the lines I want to see. All right. So normally the problem with trend lines is that they're focused on pivots, and but then you're following this like sort of like rule, how many pivots you're looking for before the trend happens. That's not really how people see trends. Let me switch back to that other one. That's not how people normally see trends. So here, I'd see a trend, let's say, over here. I like dealing with wicks. Those are my favorite levels. Let's see here. So this adjusts. Yeah, see? Normally this would have been this trend over here. And then it draws again from here to here. And then again from here to here. So the trend sort of moves. I have one that I built previously for Traders Post. What was that called? Trend. What was it? Let's see what it was. What was it? I did it a while ago. Where are you? Simple trend lines. That's what it was called. Oh yeah, that was pretty good. How did I do this one? All right, specific pivot points. Yeah. Yep, I use specific pivot points. which is what I want to avoid. I want to avoid that. So there's different ways I could go about doing this. I could do it so that every point that can be connected is connected, and then I filter out those points accordingly. Hmm, 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 hmm. Let's see here. Let's see if anyone else has a way that they're going about it. Let's see what Perplexity says. Cheers. Manual drawn technique. Identify major swings, highs, and lows. Trend lines are typically drawn by connecting at least two significant swing lows for an uptrend, two swing highs for a downtrend. Use candlestick wicks for greater precision. Connect the wicks extremes rather than the bodies of the candles. That's what I like to do. Validation of a trend line becomes more reliable when the press touches it at least 3 times. Ah, yeah, that's what it was. The touching of the level. Spacing can be too close or too far apart, and scale considerations. Algorithmic and automated approaches. Hoff transform. This image processing technique can be adapted to detect straight lines in stock price data by identifying linear relationships among data points. The algorithm groups similar lines and reduces candidate trend lines, automated what a human might do manually. Weighing and filtering. Algorithms often apply weighting methods to group similar detected lines, helping to filter out noise and focus on significant trends. Feature extraction. Automated systems can be extract, okay, blah, blah, blah. So, what's this one? What's the Hoff transform? A novel method of trend lines generation using Hoff transform. Okay, so difficulties in creating support resistance lines, including finding support resistance values, are things finance experts are also attempting to overcome. Blah blah blah. Support lines change resistance, breakout, yada yada yada. False breakout. Okay. The least complex instance of how how do you pronounce that? Who transform is detecting straight lines. Ordinarily, the straight line can be represented by two parameters a and b, and a common form of equation in two variables x and y. Y equals mx plus b. Yeah, standard in the who space. How do you say this? Space. Let me ask AI. Huff space. Okay. Huff space. Okay. All right. In Huff space, lines are described by equation number 2: x cosine theta plus y sine theta equals r, where r is the distance from the origin to line and theta is the angle of the line. The fundamental idea for the Huff's change is the mapping of single points. The idea is that a single point is mapped to all lines that can pass through that point, right? That yields a sine-like line in the Huff space. The example of transformation of points is shown in figure 7. So a point, we connect the line. All possible lines pass through P0 and P1 in the Huff space. Okay, so we have decide the ranges where most Huff space lines cross. An accumulator covering the Huff space is utilized at this point. When the data is changed, binning accumulators are augmented for all lines that can go through that point. Okay. In this section, the overall process of trend lines generation as described, figure 8 presented the flowchart of our method. First, stock data, high price, low price, and close price are found the local peak. The data from local peaks are normalized by maximum and minimum values before the next step. Huff transformation. Accumulator matrix are calculated to extract the lines. Those extract lines are not all trend lines. We need to extract state of the stock price interact with those lines. There are 4 defined states, which are touch stage, breakout stage, false break stage, and throwback stage. We call this process as a state extraction, figure 9. Okay, interesting. So let's see if we can use AI to our advantage. Let me grab this paper. Actually, let me just download it. I can't zoom in anymore. Okay, so let's download you. We're gonna feed you to the AI, boy. Just Claude Code. I would like you to create a trend line indicator in PineScript version 6 using a Huff space method. Please plan out how you would tackle this. Let's go into plan mode and let's see. You can't read the PDF. Why can't you read the PDF? All right, let's see what it decided to do. I'll create a PineScript v6 indicator that uses the transform method to automatically detect and draw trend lines on price charts. The Huff transformation is excellent for detecting straight lines and noisy data by transforming points into parameter space. Point selection and pre-processing. Select significant pivot highs, lows as input points. Use a lookback period to identify local extrema. Store points in an array with XY coordinates where X equals bar index and Y equals price. The transform implementation. Convert each point to Huff space using parametric representation. Create accumulator arrays for P and theta parameters. Discretize theta from 0 to 180 degrees for each point. Vote in Huff space for all possible lines passing through it. Find peaks. Apply a threshold. Sort peaks. Convert P theta parameters back to slope intercept form. Calculate line endpoints. Draw lines using Pine script, line new, manage line objects within the Pine script drawing limits, future user input, blah, blah, blah. Okay, so I want to make sure that it understands that we have other tools in Pine script. That's over concepts. There it is, matrices. Let's feed the AI. Loops. Objects. I like to make sure you are deeply familiarizing yourself with PineScript v6 concepts so that you are ignoring tools that you could be using. Arrays, matrices, and maps. Alrighty. Right now, it's tokenizing everything from the documentation page I've provided it. Tokenize it, AI. Fetch it all. See, now is when I would normally be also looking at YouTube videos and watching things to keep abreast as to what's happening. All right, I was listening to Bernie Sanders on Joe Rogan. All right. Let's see. All right, so I can create user-defined types, matrices, arrays, and maps, key data structures. Implementation details, point detection with methods. All right, that's normal. Huff transform algorithm. Okay. All right, it seems to be using the advanced features. Let's see what you make. Yikes, I'm in 720p again. I did not change the detail for this room. Oh well. Next time. Actually, next time I'll use OBS. That way we don't have to do it this way. Processing. All right, well, while that's happening, should I try to get audio into here? How to pipe audio in? How to do that? Let's see here. Error. Learn from it. All right, let's see if you can hear this.
Don't worship me, no. Lift up the stream that parts the sea. I'm just a vessel in velvet shoes, guiding you through these market blues. Don't worship me. Give praise where the river flows free. I only carry the flame. The prophet ain't the name, the prophet
Yeah, you can hear that. Fun. Okay. I've successfully implemented. Hey, where did you implement any of this? Where did you put all this information? Perfect trend lines. I don't see it. Oh, because I edited the file. Compare. Reject. All right. Let's see how it did. Let's see how Claude Code did. We have an error here. A resort. Select an array order. Yeah, what's these extra values here? Oh, you can't do that. Let's hear that one more time.
Don't worship me, no, no, no. Lift up the stream that parts the sea. I'm just a vessel in velvet shoes, guiding you through these market blues. Don't worship me. Give praise where the river flows free. I only carry the flame. The prophet ain't the name. The prophet ain't the name above every name. Oh, yeah. Step in the pulpit, pinstripe cufflinks, mint condition kicks. Flipping these candlesticks quicker than Moses flicked bricks.
AI
I'm
music,
the
folks.
algorithm, flood of encrypted vision.
AI
Spitting
music.
ticker tongues, deciphering volatility's religion. Harlem swagger on the beamer, but my cadence is Detroit raw. Split Caesar spread. Let the faithful walk the bid ass floor. Don't crown me king, I'm the courier of cosmic math. I'll never taste the milk and honey, just clear the golden path. No, 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 no. Lift up the stream that parts the sea. I'm just a vessel in velvet shoes, guiding you through these market blues. Don't worship me. Praise where the river flows free. I only carry the flame.
All right, let's get back to you. Let's see if it fixed it. Undeclared identifier theta. listening to Bernie Sanders right now on Rogan. They're talking about, oh, what is going on here? Now fix all the undeclared variables. All right, let's see if you did. See, they're talking on Joe Rogan about AI replacing people. And they're skirting around this idea. I guess they'll get to it at some point. Universal basic income. What do you do if the corporations don't need people? And I don't see that happening because it's people that they need to buy the things. They want the profits to be able to buy things, to have a status. If people don't have anything, who's going to buy the things? What game will we be playing? Yeah, maybe it'll be a different game. Who knows? Who knows such things? Only the Oracle. Well, let's see. I should really be talking and vamping, but this is how I like working, just peacefully. Hey, why are you doing returns here? This is not PineScript. That is not PineScript. Did it update Claude with the, what was it I was asking it for before? What was that? Yeah, it is there. You're right. PineScript doesn't have a return statement, and we can't use line as a variable name since it's a built-in namespace. Let's fix it. NA offline. No return statement. Updated Claude. I like that. Please remember all the things. All right, let's see if this worked. No errors. Let's add you to chart. Moment of truth. All right. What are you seeing here? ¿Qué pasa aquí? Error. Invalid number of bars back specified. Up to 10,000 lines. Well, let's go back to you because you're wrong. This is not what I'm expecting to see. This is not what I'm expecting to see. So please debug. All right. See, I wouldn't have spent the time to code this on my own for something like this. It doesn't beat just drawing the trend lines manually. But if there's a way of automating it or automating the development of the script, I like that. Then I can go in and make modifications afterwards. It's kind of feature I enjoy. Kind of feature I like. Well, this looks better. Let's see. What are these labels? Those are pivot points. What do the labels represent? Okay, so we have endpoints over here. Line 2. Oh. see. I see. That's not going to work. All right, so let's see what it looks like. We see what it looks like for us right here. Okay, I can't tell the pivots that it's looking at. That's interesting here. It's pivot level. Pivots. All right, so that's a little bit better. All right, that's better. What do the green and red labels represent? And can you change the trend line color to white and make the line a width of 1? And can we somehow tie the pivot points associated with each line so that I see it on the chart? Let's plan that out. All right, this Bernie Sanders conversation is not leading to anything interesting. Let's go back to our plan here. Change line color, highlight pivots, and okay, let's do that. All right, you know what? I'll leave it there for now. Don't want to bore the thousands of people on the stream. We'll do some OBS, I think, tomorrow. We'll get something a little more interesting. But for now, I'll continue with this. I wish you guys a good night.